Hi, good afternoon, everyone. Before I start my presentation, this is an important notice. Like all presentation, there's a disclaimer, right? So this for education purpose. I think the color is off. Let me just get, okay. It's okay, don't worry. My presentation will contain some forward-looking statement and maybe some risks. So as you attended, all day talks today about what to invest. If you are new to investment, my advice is after today, do not rush out to buy anything. It's all your hard-earned money. So consult your financial advisor and do your due diligence before you make any investments, yeah? So I'm going to talk to you a bit about REITs and also about Ascott Residence Trust. I believe most of you are already invested in REITs, so I won't go through too technical details on REITs, yeah? Okay. I'm going to talk a bit about overview of S-REITs, just to set the expectations right. I'm not going to go too technical on the S-REITs. Just a show of hand, how many of you are already invested in the S-REITs? Yeah, okay. It's a great form of investments, yeah. I personally invested in a lot of S-REITs. I'm going to talk a bit about Ascott REIT, what are REIT strategies, and also about the sponsor, Ascott Limited. So this is a very typical S-REIT structure, and for those who have already invested in S-REIT, you know what they are like. As unit holders, we are all here. The REITs will be investing in properties. So it's important that before you invest in S-REIT, you look at what are the properties that's being invested in that REIT. You have a professional manager and also a property manager that will manage the asset on your behalf. And you have a trustee who represent you as unit holder. So this is a very typical S-REIT structure. It's a very low capital base for us to invest in properties. And I think you all know that. The key features of S-REIT is regulated by MAS and SGX. 75% of the assets are invested in income-producing real estate, and that's good because then we get our regular distribution because they're income-producing. They have development limits of up to 25%, so you do not take too much risk, and the gearing is capped at 45%. So Timothy earlier shared about, he looks at stocks that are not too highly geared. So REITs are regulated. MAS only allow us to gear up to 45%. You see that most REITs gearing are close to about 40%. The best thing about REITs, which is what I like, is tax transparency. For REITs who distribute up to 90% of their distributable income is tax-free. So if I own a physical property, I rent it out, I have to pay income tax on the rental income I receive on those property. But for REITs, they are tax-free. So it's a great form of investment for those who want to be exposed or invested in the real estate sector. And the best thing is, of course, as regular distribution is a very good form of passive income. Every quarterly, for some REITs is quarterly, for some REITs are semi-annual basis, you get cash distribution. Yeah? So as an investor, what's the appeal of investing in S-REIT? It's very stable return. It's almost like bonds, plus an equity features as some attractive dividends. Tax transparency for most of us when we receive the distribution is free of tax. Regular cash distribution, every quarterly I receive cash from the units I invest in, and they are tax-free. And of course, like what Timothy said, REITs and real estate are a natural hedge against inflation. So just to give you an overview of the S-REIT landscape right now, the REITs in Singapore have been listed for more than, the industry started more than 10 years ago, and it's a very established industry in Singapore. So currently, right now, there are 42 REITs and business trusts listed in Singapore. Timothy talked a little bit about that. There are different real estate class with different risks and returns. So you have to decide which is the real estate class you want to be invested in. There's industrial and logistic REITs, retail REITs, hospitality REITs, office, there's some diversified REITs, and of course, healthcare. So there are currently 42 REITs listed in. If you like to invest in REITs, then you decide which asset class you want to be invested in. And of course, different asset class will have different returns and risks as well. So currently, Ascott REIT is classified under the hospitality segment. Yeah. Okay, so just dwell a little bit on hospitality as REIT. Ascott REIT is a hospitality REIT. And currently, look at this slide here. There are 6 other hospitality REITs listed, including Ascott REIT. So over here on the left shows you the total assets of all the hospitality REITs listed. And over here shows you the number of countries where the assets are located for these REITs. So this is Ascott REIT. Ascott REIT is currently the most geographically diversified. We have assets in 14 countries. And also in terms of total assets and market cap, this bubble shows you we are the biggest in terms of total assets and market cap compared to the other hospitality REITs. For example, if you like hospitality sector, you look at this chart here and you decide whether do you want a geographically diversified portfolio or do you want a pure Singapore-based player. So you have to make that decision as well. The other hospitality REITs that are listed in the S-REITs are Far East, OUE, Ascendus, Fraser, and CDL. And then there's Ascott REIT here. Okay? Next slide, I'll just give you an overview of Ascott REIT. That's where I'm from. Currently, Ascott REIT market cap of 2.5 billion. We're the largest in terms of market cap. We own 75 properties globally. Probably the most diversified. We have the most properties in the S-REIT. We are in 14 countries and 38 cities. So if you buy an Ascott REIT, you know that you have a global presence in terms of the property presence globally. This year, Ascott REIT has also won a Best Hospitality REIT Award, a Platinum Award. In terms of corporate governance, Ascott REIT ranked 6 out of 42 REITs listed. Just give you some color in terms of where all the assets are located for Ascott REIT. We have a total assets of about 5 billion as of June, of which 60% is allocated to Asia Pac, and 40% to Europe and America. So we are very diversified across all the property and economic cycles in these countries. There is no single concentration. If you look at the breakdown of all these assets allocation, not a single country concentration, and each country less than 20% in terms of asset allocation. So we are diversified within the REIT itself. So no single country exposure will have a material impact on our REIT performance. Yeah. This slide shows you the total shareholders' return of Ascott REIT. Ascott REIT is the first hospitality REIT to be listed in Singapore Stock Exchange. We have been listed for more than 10 years now. So we listed in 2006. And this has been the distribution income growth for the Ascott REIT since IPO, and the CAGR of 19%. Based on 2016 DPU and closing share price of 31st December 2016, Ascott REIT's DPU is about 7%. On a portfolio basis, on average for the last 10 years, the DPU is about 7% as well. This year, Ascott REIT just issued a rights issue in April, so we'll see a decline in terms of the DPU because of enlarged share base, but also the share price of Ascott REIT, like what Timothy has said, the S-REIT sectors have gone up quite a lot in this first half of the year. So expecting a yield of about 6%. I think you're all very familiar. Investing in REITs have given us a higher returns compared to putting our money in the fixed deposit. But of course, investing in REITs also have its risk. So you just please study the risk before deciding putting all your money in the REITs or in the stock market. But on a comparable basis, REITs gives us a return on average 5 to 6% above the 5-year government bond, which is about 1.5%. Based on last year's Ascott DPU, about 7%, it's about 520 basis points above the 10-year government bond. And most of us will leave our cash, excess cash, in the deposit rate, right? So DBS pay us less than 1%. So for me, I personally invested in REITs as well, and I think it's a great, personally, a great form of investment for me. So for Ascott REIT, what do we invest in? What's our investment mandate? Ascott REIT invests in service residence. Real estate predominantly used for service residence. We also have rental housing properties and other hospitality assets. And our investment mandate allows us to invest in any country in the world. So that explains our diversification portfolio. In terms of gearing, Ascott REIT historically has been around 34% to 41%. As of June, our gearing is 32%. Distribution, different REITs will give distribution in terms of timing. Ascott REIT has been distributing 100% of our unit holders' distributable income for the past 10 years, and our distribution is on a semi-annual basis. So some REITs distribute quarterly. Ascott REIT has been distributing on a semi-annual basis. Of course, you know Ascott REIT is 44%, have a very strong sponsor, Ascott Limited, which is 100% owned by CapitaLand. And Ascott Limited is 44% invested in Ascott REIT. So there's a very strong alignment in terms of the relationship between the sponsor and the REIT itself. And you can invest Ascott REIT using your CPF, because it's CPFIS. So, how many of you, I believe most of you travel overseas, stay in a hotel, right? So you all know what a hotel is like. When you go inside the hotel room, there is beds, and then you know you have your toilet. So usually it's a little bit smaller. How many of you have stayed in a service residence when you travel overseas? How many of you? Okay, good. Do you like staying in a service residence? Yes? Okay. So what's the difference between a service residence and a hotel? Okay, so for us, Ascott, we call our service residence a home away from home. So when you travel overseas, instead of staying in a hotel, you check in a service residence, which actually is a fully furnished apartment, which is catered for both short stay and long stay. And there's usually a kitchen, a living and dining area. So when you travel with your family, actually it gives you a little bit more space than the hotel rooms, yeah? So you can see that we have Ascott Raffles Place here, in Singapore. So you know, walk out NTUC later, when you leave this building, you look on your right, actually Ascott Raffles Place is just at the corner there. It's a very old building, it's a conserved building, but that belongs to the REIT. Ascott Raffles Place belongs to the REIT. Yeah? Somerset Grand Hanoi, this is in Vietnam. We have 5 properties in Vietnam. You see this kitchen, and a pantry that they can work in, and then there's citadines as well. So service residence is a slightly different concept from a hotel, although we are in the hospitality industry, but our rooms are slightly bigger and give the guests a lot more comfort when they live with us. So what's the key difference between a hotel and service residence? I can basically classify the difference in terms of the lease structure and the tenure, the cost structure, and the seasonality. So what's the difference in lease structure? For hotels, usually it's catered towards a short-term accommodation because the rooms are generally smaller, so most of the guests will stay there just for maybe leisure or short business trip. But for service residents, our lease terms are generally longer. We cater more towards the business travelers. We can have some short stay in terms of leisure, but our guest profile are mainly the corporate guests who wants the space, a bigger space and the kitchen when they stay for project groups or when expatriates relocate to another country. So the length of stay is longer. The cost structure is different for hotel and service resident. Hotels usually have a F&B, bigger ballroom and meeting rooms. So the staff to room ratio is a bit higher, And there's full range of hospitality. So when you check in the hotel and you check in a service residence, it's slightly different because there is restaurants and a lot more staff taking care of you. Whilst the service residence, we offer a bit limited service and lower staff to room ratio. So the operating cost structure is also different. The last thing is on seasonality. So hotel, you have a little bit more seasonal on the tourism industry. Whereas for service residents, we are driven more by the macroeconomics factors such as the GDP and FDI of the country. So that's some of the key difference between a hotel and service residence. Under the Ascott REIT, we have different types of contract that contributes to the income of the REIT. So we have what we call the stable income, meaning they are kind of fixed in terms of the rental that the REIT receives, because these properties are under the master lease or properties that have minimum income guarantee. So this bucket here, about 50% of our properties receives kind of a fixed kind of rental income from the lessee. Yeah? The other bucket of properties that we have are what we call the growth income. They are properties under management contract. So the properties in a REIT that are under management contracts will subject themselves to a little bit more volatility of the performance of the property. Yeah. So this chart shows you the second quarter 2017 gross profit contribution by the different types of contract. If you look at here, 60% of our profit in second quarter is contributed by what we call the growth income, meaning the management contracts. And the other 40% is by the stable income, meaning the master leases or the management contract and minimum guarantee income. As a manager, we like to have a balance between what we call the growth income, meaning if the property perform well, you get higher returns, and property also may not perform so well, and then the returns will be affected. And the other half of our contribution comes from the stable income, where we have a master lease or minimum guarantee income, and the income is fixed to the unit holders. As I mentioned earlier, so for service residents, our focus is really on long stay. So our guests stay with us for 6 months or 1 year. It's almost like a rental housing, but with serviced. Yeah? So average length of stay for our properties that are under management contract is more than 3 months on a portfolio basis. And different countries and different properties will have different guest profile. So for example, in Vietnam, most of our guests stay with us are long stay corporate guests. They'll stay with us for more than 6 months or 1 year. And they are mostly expatriates that will choose to stay with us. So what are Ascott REIT strategies? If you attend all the talks by the REITs, you'll see this very common theme. They'll grow by acquisition. They'll have a very active asset management and capital and risk management. So before you invest in a REIT, study what the REIT manager has done in terms of growing through acquisition. How can they grow through acquisition? Whether they have selected properties that are good for the portfolio. And active asset management, what do they do to enhance the value of your property? So that you can maximize the returns of your portfolio. And lastly, capital and risk management, whether they have access to capital, low funding costs, and manage the capital. So this is Ascott REIT. Ascott REIT, it was listed in 2006. For 10 years now, we have grown in terms of our total assets from 1 billion to 5 billion through active acquisition. In 2017 itself, we have added 4 accretive acquisitions, 4 properties to our portfolio, 2 in Germany with an EBITDA yield of 5%. We also acquired a property in US at the EBITDA yield of 6%. And also in Singapore, in October, we'll be taking delivery of one of the property on Orchard Road, Ascott Orchard. So this year itself, the REIT has acquired 4 properties. We also have a very strong team to do active asset management. What they do is they will As a property age, after maybe 7 years, we'll review and do regular asset enhancement to our properties. So, for example, in Somerset, Ho Chi Minh, this year we completed the final phase of our renovation. You can see that before renovation, we still get this box TV in Vietnam. And then post-renovation, there's ADR, which is the room revenue, increased by about 23%. This is Somerset Millennium Makati, pre-renovation and post-renovation. So before we embark on any renovation, we'll make sure that there is a payback of less than 5 years, and that there's justification for us to do the renovation before we put in the capex. Through portfolio reconstitution, that the manager also throughout the years have been divesting properties that we feel that we can actually unlock the capital for our unit holders and realize the capital gain. So for the past years, we have been actually divesting close to 1.3 billion of assets, and either redeploy them into higher yielding assets or part of our capital management. So the net divestment gain that the REIT has recognized over the past years through the divestment is close to $300 million. So it's important as a manager to make sure you acquire the right asset, and when you want to exit it, the asset value has also appreciated, and that you can exit it in a readily manner. This year itself, the manager has divested 18 rental housing properties that we owned in Tokyo at 16% against the last valuation. We also divested 2 China properties, one in Shanghai and one in Xi'an. And total divestment proceed this year is more than 300 with a gain of 65 million. Lastly, just a bit on capital and risk management. Our gearing as of June is 32%. We complete the acquisition of Ascott Orchard and Doubletree in 3Q and 4Q this year. With the divestment of our 2 China property, our gearing will be close to about 36% by end of the year. Our interest cover is 4 times, more than 4 times. Borrowing cost is 2.4%. Just now, Timothy also asked about whether rising interest, is it good for the REIT? So for Ascott REIT, we have our interest rate fixed at 85%. Yeah? So our weighted average debt to maturity for our loan is 4.8 years. And we are also rated by Moody's and investment grade. Okay, so I've just covered a little bit about the S-REITs, what Ascott REIT does in terms of our strategies and also our past performance. I think it's also important for me just to take a bit of your time to share with you about the sponsor. I'm not sure how many of you know Ascott Limited? Okay, wait, I think it's easier to say how many of you know CapitaLand? So I think most of us know CapitaLand. I mean, we shop at Capital Malls, you know. So they're 100% owned by CapitaLand. So Ascott Limited is also 100% wholly owned subsidiary of CapitaLand. Yeah? And Ascott Limited is a sponsor of Ascott REIT. So besides managing the properties for Ascott REIT, actually Ascott Limited manages a bigger portfolio of properties for the other third-party owners, that means not owned by the Ascott REIT. And it's important because if the sponsor continue to grow, it actually adds scale to the sponsor, which actually then increases our brand recognition and also the sales and distribution channel, and also reduces the cost of operation. So Ascott Limited is actually the largest international service residence owner-operator globally. So besides managing Ascott REIT's properties, they have close to 70,000. So Ascott REIT, we own about 11,000 units, but Ascott Limited, as a sponsor, manages close to 70,000 units on their portfolio. So that's their scale. They have over 30 years of track record. Ascott Limited, Ascott brand is actually a Singapore brand. I'm not sure whether you know that, but it's a Singapore brand. And I've got 30 years of track record managing service residence properties. They have award-winning brands, Ascott, Somerset, Citadines. And between Ascott Limited as a sponsor and the REIT, they have granted the right of first refusal for acquisition of any service apartments to the REIT. So this slide shows you the scale of Ascott as a sponsor in terms of where their footprint is. When I look at this slide, I'm actually very proud to be Singaporean, because Ascott is a global brand, and it's a Singapore company that have actually planted their flag in all these countries where it's a key gateway cities and where business are transacted. And in this year itself, Ascott, the sponsor, have actually increased their presence in Australia through acquiring what we call the Quest apartment, which is a leading service residence provider in Australia. So now Ascott is actually the leading service residence provider in Australia. On top of that, they also acquired Synergy Global Housing. So now they are planting their flats in US as well. So you can see this portfolio here. Ascott actually have footprints almost all over the world, and we have more than 30 years of track record managing service residence properties. And you can see that there is increasing trend towards service residence properties, because the growth, as you can see, the cost structure are slightly different from hotel. It's a bit lower, the staff to room ratios are lower, so the operating costs are lower. So there's an increased presence or preference for developers to build service residence instead of full-fledged hotel. Yeah? So because of that, Ascott Residence manages to secure a lot of third-party owners and manages their property as a service residence. And with that, of course, then that gives us, as a REIT, a bigger platform in terms of possibility of acquiring good class of assets as well. These are the Ascott brands. We have the Ascott, the residence, this Ascott Raffles Place. Later we walk out of this building, you'll see this building on the right. Citadines is a Europe brand which Ascott acquired in many years ago. But if you travel to Europe, you'll see Citadines in Paris, in most of the cities in Europe. Yeah? And they are all strategically located near the train station or the metro. They have the Somerset brand, which is catered towards more the family and expatriates living, and Quest, The Cleft, and Life. So these are the brands under the sponsor. So in conclusion, I'll just wrap up my presentation. I talk a bit about the sponsor, also the track record of Ascott REITs, delivering a stable distribution and sustainable returns to the unit holder. We have grown over the past 10 years through accretive acquisition, proactive asset management by enhancing the value of asset, and a disciplined and prudent capital management. We'll continue to do that, and I believe that with the growth of the sponsor, we will continue to expand as well. So next time when you travel, choose to stay with us. You can go to our Ascott online website and discover your home away from home. So please allow me to share with you one quick video. Thank you.
Just one place. Home is not just one place.
But a collection of memories in many places.
It's where you start the day with a smile.
Where serious business gets done.
And where traditions blend with conversations.
It's where you don't just remember the city, but also the moments.
And not just the adventure, but also the connection.
It's where you share laughter.
And where you share joy.
Where seasons change, but not a moment is wasted.
It's where your friends are, and new experiences await.
And where no request is too small.
Because it's where we live.
And the Ascott lifestyle we have come to love.
Ascott is where we want to be.
Thank you. Have a question? You want to take question now or later?
Can take now.
Okay, yes. Yes. Management fees, 0.3%. Acquisition fees, 1%. Yes. Yes. No. Only the GOP is a variable, yeah. Yes. It's the same across most of the REITs. Yeah. Yeah. Sorry? Same, 1% and 0.5%. It's, okay. Yeah. We have delivered sustainable returns to our unit holders. Yeah. Any more questions? Okay, thanks. Thank you.